hedge fund marketing tips to impress investors and raise capital. I'm Kaylee Alessandro, Marketing Programs Manager at Hedge Integration, and I will serve as your host and moderator today. Before we dive into the topic of marketing, I'd like to share a little background on Hedge Integration for those of you who are not familiar with us. Hedge Integration is the leading provider of private cloud services and technology solutions to the hedge fund and investment management industry worldwide. We were established in 1995 and today have offices in 8 U.S. locations as well as international offices in London, Singapore, and Hong Kong. In addition to our private cloud services, we have a solutions portfolio that includes disaster recovery, business continuity planning, and security services, as well as an award-winning 24/7 help desk service and much more. Allow me to introduce you to our 2 speakers today. Kyle Dunn joins us from Meyler Capital, where he is the CEO. Prior to founding Meyler Capital, Kyle held positions at Playground, Sotheby's International Realty Canada, Blueprint Global Marketing, and Second City Capital. It was during his tenure with Second City as Vice President of Investor Relations that he came to realize that the methods commonly used to source capital were extremely inefficient. In forming Meyler Capital, Kyle set out to change how asset managers, companies, and individuals think about marketing and how placement agents perceive the process. So welcome, Kyle.
Thank you.
Also joining us today is Mary Beth Hamilton, Vice President of Marketing at Hedge Integration. In this role, Mary Beth is responsible for marketing strategy and integrated marketing programs to drive awareness and demand for the company's IT services and solutions. With a decade of marketing experience, Mary Beth is skilled in guiding marketing efforts for services organizations. So welcome back, Mary Beth. The purpose of today's webinar is to talk about how hedge funds and alternative investment firms can market themselves to investors and what investors are really looking for, particularly when it comes to technology and cybersecurity safeguards, as we'll get into a little bit later. So some of the specific areas we'll look at include analyzing and optimizing the hedge fund marketing process, the value of brand loyalty, the evolution of investor due diligence, and selling technology as a differentiator for your firm. So before we dive in, a few quick housekeeping notes. Today's webinar should run about 45 minutes or so, at which point we will open up the discussion to the audience. If you have questions throughout the course of the presentation or during the Q&A period at the end, we'll ask that attendees use the Q&A function within the GoToWebinar interface to submit those. Also, please feel free to follow along with us on Twitter, where we will be live tweeting some of the key discussion points throughout the webinar. At the bottom of the slide, you'll see the hashtag HFMarketing, so feel free to use that to follow along and join in the conversation. Finally, today's event is being recorded, and both the recording and accompanying presentation slides will be made available to attendees post-webinar. So without further delay, I am going to turn the reins over to Kyle to get us started and talk a little bit about marketing. Kyle, take it away.
I will do that. All right, can everyone see my screen?
Okay.
You can see the screen. My objective of the call, I've got a fairly kind of in-depth presentation. All I really want to do is try to get people thinking differently about the marketing process. I think the industry is sort of paralyzed by tradition to a certain extent. I'm a big believer of tradition. I respect tradition. I respect the marketing deck. But I'm just sort of pushing on the boundaries of marketing and trying to get people thinking differently. Looking at marketing, I see marketing in a variety of different boxes. I look at marketing infrastructure, then look at language tools, things like that, to really sort of change the dynamic of the process. Marketing infrastructure, it's all about the systems. You can go out there and create a bunch of energy. However, if you don't have a place to manage that interest, the whole marketing process falls down. And looking at the industry, when I came into the industry about 4 years ago now, I was just amazed by the lack of complexity around how relationships are managed. And it's the industry itself that is telling me, okay, raising capital is a relationship-based process. I just look at the industry and I go, well, if it's about relationships, why are people not nurturing relationships very well? And no matter what room I walk into, and of all the people on the phone, if I challenge you and then said, show me your nurturing process of relationships, show me your CRM systems, show me your sort of marketing systems, and all that structure and infrastructure, I've yet to encounter anyone really that's doing a good job of developing that life cycle in terms of their marketing process. And that just relates to your ability to track and analyze who's opening emails, what you're saying in those emails. It's interesting that when people start the marketing process, the first thing that goes in their head is, okay, go talk to that institution, see if they're interested. It's absolutely crazy, in my opinion, that people do that, right? You can't ask someone for money unless you have a relationship with them. And so how do you develop that relationship? Well, you need to provide knowledge. You need to create value. And it's not about who the investors are in this space. It's about how you can connect with those investors. So when I think about marketing, it's not about the 30 or 40 people you already know. It's the 100, 200, 300, the 5,000 people that we can access with the press of a button. What are you doing with those people to build your funnel? And you can't build that funnel unless you have the infrastructure. So summarizing that point, the first thing that you need to do is you need to build the capability to manage interest, and people in this business don't do that very well. This slide here is one of my favorite slides. Language in this business is another thing. We all create our decks. We all do this sort of thing. We all think that we're saying impactful things, but when you look at these are just some 4 groups that I grabbed. I could find hundreds of groups like this. So if you look at the language in marketing, everyone relies on dead language, in my opinion. That's language that doesn't mean anything anymore. And this is an example. If you look at SunCap, a world-class operating team, KKR, we have a focus on operational value. Carlyle Group, we have an operations group and portfolio intended to create and execute a customized value creation plan. TPG, operational expertise. These are all amazing companies, amazing groups. However, this industry is frozen by language that's so similar across everyone that I think it's just hugely important to differentiate yourselves with language. There's information overload in this business. If you think about your marketing deck, I understand that marketing decks are necessary. I don't think anyone's reading these marketing decks. I think it's a rite of passage in terms or to open up communication. It's almost like you could use a rock in replace of a marketing deck. It's a checkbox. But looking at decks, you need to dilute the information and say the impactful things without relying on that dead language, which I think is an opportunity. Case in point here, like those listening, I'm sure there's groups out there managing billions of dollars. I look at these environments and I see that people are still using like PowerPoint. To a certain extent, a lot of these presentations could be designed by someone in grade 10 if we're being really serious. Like, I just can't comprehend in the basis of my soul why people don't use just other means to create an impression in the marketing process. These decks, they're printed on shoddy paper typically. They're left on tables. One of the biggest value creations of a marketing deck has nothing to do with the language within the deck. It's all about the perception, the professionalism, and the tactile nature of what that is. So it's a huge opportunity, in my opinion, in this space to change the dynamic by changing the leave behind or what's there. I wrote a little book about all this sort of stuff, and it's a good example. It's just something that's different that you can leave behind when you walk out of the room. the main kind of sort of point to all this is just differentiate yourselves, right? Like talking about operational experience, talking about risk mitigation, like God forbid talking about performance. Performance doesn't mean anything. It's a checkbox, right? You show me 15%, I'll show you 100 funds with 15%. I'm not so naive to not recognize that performance is everything. If you don't have it, you're dead. However, it does relate to the risk profile and all those sort of things, but it does not differentiate you. The challenge investors have is all the materials look the same, and as I've demonstrated, they say the same thing. So what do they have to do? They have to dig in and go through the diligence process to figure out why the hell these 30 groups are different. And it's interesting, I get in the rooms with all these people and all these managers, and when they're in the room talking with investors, they're awesome. They say great things. However, I look and I listen to what they say, and none of that shit is on their marketing materials because they're paralyzed by the industry's perception that everything has to be straight down the path. Oh, we're talking with conservative funds, we're talking with conservative investors, all those sort of things. I walked into this space and I was respectful of that and I listened. However, I listened to the point where I've come to the conclusion that conservatism is what is paralyzing your ability to market. Because people have the perception that marketing is, and good marketing is about being conservative. There is no correlation between great marketing and conservatism. That's the biggest misconception. And right now, people use conservatism, in my opinion, as an excuse to not market effectively. I could talk about that forever. Here are a couple examples of some websites that I really like, that I really think are good. I recognize these aren't for everyone, but it's just an example of saying something impactful. The Silver Pepper, I use the analogy that if this business were to build freeway signs, they put a bloody paragraph on it. The world is moving too fast. You only have so much landscape. You have to create the arrow and push people to a place where they're going to pay attention to you. And why I like the Silver Pepper? Because you can't help but read that. Like a freeway sign, you read that whether you want to or not. And that's how you need to layer information in the marketing process. Pushing out a 57-page marketing deck is not the right way to engage an audience. It doesn't work at all, but we all continue to do it, and it just blows my mind. Just the point here, your website is your brand ambassador. There's nothing more important in today's day and age than your website. Everyone will go to your website. I shouldn't say everyone, 99% of people will go to your website before they invest in anything. Just make it good. And a lot of websites out there are so dated. A lot of investors out there are going to these institutions trying to create this perception that they're these very sophisticated managers. But then you go to their materials, and again, it looks like someone in grade 9 built their website. And I hear time and time again, oh, well, our institutional investors don't care about our website. It's all about our performance. Well, that's the industry's excuse for not having good materials. It's the manager's excuse for not investing in themselves. And managers have to get over that. With things like the Jobs Act hitting, like, it's going to get harder. It's going to get tougher. Like, I've spent 10 years of my life launching major real estate projects. Like, it's no different. I've had to sell $500 million of real estate. If I'm selling $500 million of real estate, if I don't have a $8 million marketing budget, I wouldn't even try. When you look at this industry and you're trying to raise $500 million, you talk about hundreds of thousands of dollars, and people get all nervous. Like, the marketing process is going to mature, and it's going to be indicative of other industries as time goes by. So in our marketing, this is the act of bouncing information off of people and interpreting the results. I'm amazed in this business how infrequently this is done, how poorly it is done. It's one of the greatest marketing opportunities out there. Like, people email institutions and they seem to get flustered when they never hear back. Like, I haven't expected anyone to email me back in 5 years. It's not about getting information back. It's about pushing out information in a way that you can understand who's engaging in that information and monitoring that. And you can so easily profile who's interested in what you're doing by the information they absorb. And I'm gonna jump off the presentation here to show you a couple things. I'm gonna move slow because I'm not sure how fast the screens will keep up, but I'm going to show you a real live example of a campaign we sent out yesterday that is the perfect demonstration of a sonar marketing campaign. So this is a company called KFL, Capital Management. It's a machine intelligence fund. They're up 25% year to date. What we did is we pushed out a video yesterday, and this is live data. This is capturing this data as of right now. But why video is unbelievable? Video allows you to monitor who is watching and who is engaging in your content. You can see exactly how much people have watched. So if you look at this Drake Michael, I can see that 5 minutes ago he watched 100% of this video. These here, the Rockefeller Group, Thomson Reuters, these are coming from a LinkedIn post. I don't know exactly who those people are, but you can see on this one that happened at 6:46 a.m. If you go over to this sort of segment, I can see that he watched, or this individual watched this video twice there, and this part 3 times, that little part there 4 times. I can tell you exactly what that content is. But if you keep going down and looking at this material, you can track exactly who's watching this. And this data here, this information here, this is very easy to do. KFL, to do this, yeah, we had to build some videos, and I'd really encourage you guys to watch the nature of this video. I'll look to play a quick little segment of it so you can get a sense of kind of the professionalism of it.
KFL is an investment management firm. We're really a data science team surrounded by an investment management firm. We trade the most liquid markets in the world using machine learning, predictive modeling. We developed an expertise in predictive modeling, and we direct that expertise towards the futures market. KFL's.
So that just gives you a sense of the tone of the video. But what's really cool about this, in the last 2 days, we had 229 people that have watched this video. And if you see, I can tell you exactly who those people are that are watching this video to a certain extent, right? That's because this information and how we're presenting this information is designed to be engaged. It's designed in a way that is how the world works, right? So what we did when sending this email, we designed this email so it has a subject line, 1 or 2 sentences, and then the video. There's not a more powerful way to profile interest. So with those on the phone and your relationships, again, it's not about even the new relationships at this point, but you show me a marketing deck. Show me a marketing deck that captures the charisma, passion, and conviction of a human being. That's why you use video, right? Because it's engaging. I go to all these managers, and these managers say, okay, once I'm in the room, we tend to do quite well. I'm like, well, why not capture that charisma and let me put you into 200, 300, 2,000 rooms at one time? I can tell you exactly who's engaged in your information. And why not follow up with the 50 people, the 100 people, the 200 people that invested the entire 3 minutes? This video is 3 minutes long. Follow up with those people first, because they're engaged in your material. Like you can't send a marketing deck and accomplish that. And it just blows my mind that the industry keeps trying to do that over and over and over again. Just staying here on sort of blowing up the path of the presentation, but on that point, when you're looking at the diligence process, the diligence process is one of the most butchered kind of components of marketing within this industry. Diligence is not about just presenting the information and putting it out there and letting someone go through it and find it. The professionalism of which you present information, that's what differentiates you. People don't understand that. Here's a good example of what I'm talking about. When we talk about diligence, this is a diligence platform we did for a company called Spry's. They're in a capital raise. When you look at the professionalism of and the ease that you can move through this information, every possible thing you need to know about this group is captured here. That's the point. It's not just the information that you care about. It's the professionalism of which you present that information. Because when an investor encounters something like this, yes, he gets all the information, but more importantly, he's going to go, holy smokes, these guys have their act together. It is the subtleties of marketing that change perceptions. It's not your bloody performance. Because performance is a checkbox. People look at performance very quick. Then they ask, what's next? So we really have to push on creating that or differentiating the experience of working with you guys. And we can do that, and there's 1,000 tools or different tools that we can use to do that. Jumping back to the presentation. Sorry. Sort of marketing. So the KFL example is just in my opinion, it's a fantastic example of it. It's just working so well. Talked about why video. Tension is the other thing that we need to pursue. And in this business, people don't seem to understand what marketing tension is. Marketing tension is what garners a response. Tension is it's when you combine different and credible. And to jump off the presentation to show marketing tension, this is something we did for Top Turn. This was considered the first hedge fund advertisement in the U.S. and it had a professional surfer into it. So I'm gonna just play a really short component of this to understand kind of what's unique about the video.
Top turn is a move that you do in surfing. It's a way to get power from the wave, like being at the top of the wave and coming down, you kind of tap into the energy of the wave, and that'll keep you ahead of the breaking part of the wave. I did quite a bit of surfing as a kid. That was part of the impetus behind Greg challenging me to come up with a name for the company that had some surf connotation to it. The whole idea of that turn or pivot to stay in the.
So that's just an example of tension. And the tension there is we had a surfer in this video, but the quality and the cinematography and the professionalism of the tool was more credible than any marketing deck that will exist out there. We had 8,000 people watch this video in 2 weeks. They were featured on every major news network. We had them on Fox Business. They were invited on to CNBC. These guys, this fund is tiny. They manage like $12, $15 million. They're now up 400% from like last quarter 2013 to the first quarter 2014. and they're so small. Like, how did that happen? It's all about changing the dynamic, changing how you approach the world. And a great example about how to think, staying off the presentation, this is an ad that Tesla did. I'll play 5 seconds of this ad to understand why it's unique. I hope kind of these videos are and the speed of this is keeping up to that. But why this is unique, and probably one of the best examples of marketing that I've seen in a long time, is because Tesla did not create this advertisement. This advertisement was created by a bunch of film students who wanted to work at Tesla. Guess where those people now work? They work at Tesla. So what am I pointing out? I'm pointing out that all of us, we sit here, we create these generic materials, and we ask these people who can give us $100 million to give us $100 million with materials that we're giving out to everyone. Do you think that makes these institutional investors feel like you have a connection with them? God, no. Like, the point is, marketing has gotten to the stage where you can't be generic. Like when you're on Facebook, and Facebook's not appropriate for this community, I understand that, but it's a great example. When you start talking about a pair of jeans or something, you get advertisement about jeans. It's specific to who you are. Information is so prevalent that you have to show connectivity to a given group if you want to get traction. If you're trying to get money from the Montana State Retirement System, go in there, figure out who they are, figure out what they've done, and build a presentation that's designed specifically for them. Here's an example of doing that. This is something that we did for TD Securities recently. Right? Like, don't worry about what it says, but note the tone of the presentation. Note that it's specific to TD. This is one of my favorite slides, right? We did this to Steve Banke, and if you look at that and you kind of understand that this is where the marketing process has come, it's a brilliant example. The nature of this presentation is really cool as it relates to marketing as well. What our whole concept was to create and send hockey gloves to 200 people. And this is a big point for everyone on the call. Like, stop sending your marketing deck. You need to break the conveyor belt. Take the marketing process and break it. Because the marketing process, people are so sick and tired of bloody marketing decks. Every room I go into, it's almost a joke now. But we keep doing it because no one knows what else to do. So the whole concept here with TD, I'm going to send hockey gloves to 200 people that they want to talk to. Those 200 people are going to get the hockey gloves. The first thing that they're going to do, there'll be a letter from TD saying, why we send the hockey gloves? The whole concept was, okay, you're going to get a video in 36 hours. We'd really appreciate it if you watch the video. So we're going to send them a video. Now, what just happened there? Hockey gloves arrives when someone death. The first thing they're going to do is go, what the hell? Now, I follow up that. And TD, we're talking about a very big, credible group, right? And we're going to say, you're going to get a video. So we send this video. Do you not think, and see the subject line, we sent you the hockey gloves, we'd love you to watch the video. Whether you think this is a good idea or a bad idea, it doesn't matter, right? Whether it's hockey, we can replace the hockey gloves with anything. We can replace the video with anything. And I talk a lot about video because I think video is a really cool thing for all the right reasons, because it captures the most powerful component of marketing, and that's the conviction and passion of humans. However, it's the profiling nature of video that has changed everything. So it's all about getting more people to watch this video, and the analytics here. We'll see exactly who's watching that video, and then we can follow up. And now I'm taking too long. I've kind of blown up my presentation. But the most powerful, most important thing that I can say on this phone call today, you guys have to start thinking differently about the expediency of when you connect with marketing. You all send out thousands of emails. It's no longer about the bloody email going out. It's about the ability to create analytics on that email. However, when you watch a video, and when I'm doing my own marketing, when I send out an email, I step back and I allocate 3 hours of my day for that email going out. Capital is the lifeblood of this business. Everyone needs it. Everyone wants it. So if you really want it and you really want to do a good job, you have to respond instantly the moment someone engages on information. Don't worry about being perceived as Big Brother. I will take that risk every time as a marketer. I've managed databases of hundreds of thousands of people. Like, this business is so easy to market to because the community tells me exactly who's investing in what, and I can press a button and get everyone I want to talk to. So create materials that people can engage on, monitor how those people are engaging in that material, and then engage quickly. Because if someone absorbs content that you have created, you've got about a 30 to 45-second window before they forget that you existed, before they forget that they absorbed that information. And now it's about creating a template-based approach with a personalized follow-up. Like, I used to be able to automate, and I've done this more than most people you can get on a phone call. We would automate a 5 or 6 stage email campaign where you click and you'd automatically get another email. That marketing process has blown up. Now you have to show a template-based model, and then you have to engage personally. If you don't engage personally very quickly, if your marketing people aren't engaging very quickly, the ROI on your marketing spend is going to drop materially. And this is what breaks us into the new way to think about technology. This is why you need to get on LinkedIn. This is why you need to know what Finex.com is, what Palico is, what all of these online communities are that the Jobs Act has created. Do they do anything today? God, no. Most of them are ineffective. Most of them, they don't push out much capital. And because of that, most people on this phone go, well, I don't need to pay attention. That's absolutely wrong. You need to pay attention because in 5 years, they're going to work. And if you don't invest the time to learn about these things, you are going to be antiquated. You are going to lose. So anyways, I've jumped all over the map, Kelly. I've kind of gone off the presentation. I'll kind of leave it to you. And again, I can talk about, if anyone wants to reach out, I can talk about these things to such an extent, and I can challenge most kind of traditional thinking that happens in this industry. And I know in my heart that there's no possible way anyone on this phone call can challenge the validity of doing these things. However, no one in this industry is doing these things, or very few people. And sending an email out once a quarter is not good enough. Talking about your performance is not good enough if you really want to get serious about marketing. So, Kelly, I can pass it back over to you if that works, and go from here.
That works. Thanks, Kyle. You covered a lot of great info, and as you mentioned, we'll have your contact information when we get to the end of the presentation, and people can certainly, submit questions if they have, since you covered a lot of info, if they have questions, and we'll get to those towards the end.
And I'm horrible with presentations. I tend to just talk, but I hope it was valuable for someone.
Thanks again, Kyle. So we're going to move along, and I'm going to turn things over to Mary Beth Hamilton from Castle Integration to talk through some of the due diligence evolutions that we're seeing from investors, as well as some of the technology considerations as firms are looking to appeal to investors. So Mary Beth, take it away.
Perfect. So as Kyle outlined, the marketing engagement process has evolved and old tactics are no longer effective. So in lockstep with that evolution, we're also seeing from a technology perspective, the investor due diligence process is evolving. So I'm going to go a little bit farther down the marketing process and assume you're at the due diligence part with an investor and talk about the role technology can play there. And so investors are getting savvier about many aspects of a fund's operations and including technology. They want, or make that expect, to see world-class operations in all aspects of a fund's business. Now, just a few years ago, questions around technology during the operational due diligence process were somewhat limited. However, today investors and their DDQs, particularly the ones that we're seeing, are getting more sophisticated when it comes to technology. The reality of it is that investors have a greater understanding of technology and are really asking more probing questions. The frequency is increasing as well. It's not uncommon for us to assist clients with annual due diligence reviews, and sometimes more frequently, depending on the investor, that include updates on IT initiatives. So to place emphasis on the changing environment, a survey at a recent investor due diligence event, I wanted to share with you some of the findings that came out of that. So the audience were hedge fund investors, and the discussion was around what do they do as part of operational due diligence. So 72% of investors said that they will increase technology-focused due diligence questionnaires in response to growing technology risks and cybersecurity threats that they're seeing within the industry. 56% of the investors in the audience said that they plan to significantly expand the technology aspects of their operational due diligence processes within the next 6 months or less. So not only are they going to increase the questions, but the time frame in which they're going to do so is in the short term. And then 25% of the attendees said that deficiencies in IT infrastructure and security were contributing factors to their decision to redeem or not invest in a fund. So it places emphasis on the fact that it really does matter what you're doing across the organization, and it's not just investment returns that speak to investors. So what does it tell us? It tells us a number of items. First, funds need to be prepared to address a wide range of technology-related questions. They also need to understand the role that technology plays in highlighting their operational prowess throughout the due diligence process. It can be an area to help them stand out amongst peers. So what types of questions can you expect to see in an IT-related due diligence questionnaire? So we have seen hundreds of different types of questions, but they all typically fall into similar categories. So one is general management of IT environment. So they want to understand, does the firm handle this in-house or outsource it to third parties such as a cloud service provider? Who drives the IT strategy? How often is it evaluated? How is your current IT environment set up? Have there been any issues in the last 12 months, etc.? So from there, they often ask about your networking and communications infrastructure with the goal of learning more about security mechanisms that are in place, how employees access systems, and how electronic communications with third parties control. They want to view not only internally to your organization, but also externally. Investors also want to understand access control, processes, and protocols. They want to understand if you have various plans and processes in place to safeguard your environment. So, next up, disaster recovery is a key topic that's covered. So how is your DR and backup set up? When was the last time it was tested? Have you activated it in the last 12 months? If you have activated it, what did you learn from that activation? do employees understand the processes for accessing your DR system? And then another key aspect that we always see and is continuing to increase are questions around security. So security is top of mind with investors given high-profile breaches and the SEC's exam questions around cybersecurity. They really want to see that you have layers of security in place as well as conduct risk assessments of your environment. So it's worth noting that there isn't necessarily one right answer to every question. Rather, investors want to see that you've been thoughtful about your approach and made a decision that matches your firm's investment and operational requirements. So it's a case of one size doesn't fit all, but you need to be thoughtful about each one of these areas and be able to clearly articulate why you have or have not put something into place. So now let's take a look at some technology approaches that demonstrate a fund is taking an institutional approach to technology and operations. And this is common across what we've seen in the industry and what we counsel clients to look at as they're thinking through how they approach technology and how they explain to investors why the approach that they're taking is the advantageous one for the firm. So we've got a couple of slides here that we've divided into the bare minimum and then sort of the investor-approved best practice approach to technology. So everything's going cloud, but not all clouds are created equal. The bare minimum approach for the cloud is often going with a public cloud solution such as Office 365 or Google Apps. While you may get the short-term features that you need and save some money, you certainly aren't going to overly impress investors or be able to really demonstrate the depth of disaster recovery or security mechanisms or be able to integrate with many applications such as order management that you may not need today but that you're going to need in the future. So with the bare minimum approach, it's not uncommon that we see firms quickly outgrow a private cloud and need to consider moving to a private cloud. So going back to the investor survey that I previously mentioned, it found that 84% of respondents said that the public cloud was a driver for operational risk and a real concern to them. They unanimously felt more comfortable with the private cloud. So a private cloud solution, particularly ones built for the investment industry, have the features, integration capabilities, support, security, disaster recovery, and all those different elements that mirror what a world-class financial firm would have in place. And it's something that, funds at all points of their growth can typically afford to leverage to safeguard and operate from an institutional grade technology perspective. So next up, we wanted to talk about personnel and expertise. So not surprisingly, people are an important aspect of achieving operational excellence, and increasingly investors are looking beyond just your in-house staff to the service providers supporting the fund. So from your prime brokers and fund admins to lawyers and IT providers, investors and regulators want to ensure that the support organizations that you're working with aren't adding any risk to your hedge fund operations. So this brings us to the bare minimum approach to outside service providers and, namely technology. Selecting an IT provider that doesn't understand the critical nature of your employees' functions or the applications that you're using can be very challenging for your operations. You really want an IT provider that understands the role of your traders or your applications such as your OMS and can take the appropriate steps to make sure either the individuals or the applications are handled in a way that keeps your operations running smoothly. It's really important not to underestimate the impact that your outside support organizations can have on your internal operations. So next up, we have disaster recovery and backup, which these questions have been included in DDQs for a while. We're seeing them get deeper and more specific questions about how firms have them set up. So, we find today that most firms understand that tape backup alone is not a suitable technology to claim that you have disaster recovery. While backup allows you to restore data you may have lost during a system failure, a disaster recovery solution really protects your entire organization and allows you to continue operations seamlessly if something goes down. So as far as tape backup is concerned, we are seeing it used less and less as companies may be opting for online backup, which are faster. However, online backup isn't 100% suitable. It's not, again, a one-to-one to disaster recovery. It won't protect firms if there's a major system outage. So what do investors want to see? They want to see a DR solution that replicates your data to a geographically diverse location, and they want to know that that data and the supporting applications, because you may be able to get the data, but if you don't have the applications to run them on, it's virtually useless, can quickly be accessible from virtually anywhere in real time. So you want your employees to be able to access your DR, your secondary site, or whether it be a physical site or virtually, quickly and easily. A final key component of DR that investors regularly inquire about is testing, and we see this all the time. They want to ensure that you're scheduling periodic DR tests to make sure that you're not only are your DR systems working and that they have the right applications and the right data, but that also your employees know how to access these systems. And then last but not least is security. And this is an area that we're seeing investors ask a lot more questions about, and their expectations in this area are continuing to grow. So the reality is financial firms are great targets for hackers because you have a lot of financial information and data that they can capture and sell. So the bare minimum approach, and one that you should be doing today, is to have antivirus, network firewall, web filtering, and strong passwords. And when it comes to passwords, just sort of a side note here, it's not just changing passwords, it's making sure that they're complex. The longer a password is out there and not changed or not complex, the more time that hackers or others with disingenuous intentions can use that to their gain. So taking a look at what is a best practice or where is security going, more advanced security components that we're seeing firms consider and investors ask about are intrusion detection and prevention systems, advanced password policies and security, multi-factor authentication, and policies, written policies and procedures, both for what is expected and what you have in place, as well as if an incident occurs, what is your incident response plan? And we saw that within the SEC cybersecurity exam questions, that they're expecting firms to be able to provide a written information security plan in addition to how in the past they expect you and still expect to see disaster recovery and BCP plans. And then additionally, for IT environments, whether it's on-prem or in the cloud, investors are starting to ask regularly about vulnerability assessments, and if you're either a cloud provider or if you have undergone a IT vulnerability assessment to understand what risks are present and if you're taking the necessary steps to prevent those. So just, a couple of thoughts to wrap things up from a technology perspective. Due diligence is evolving, and investors are expecting to see operational caliber infrastructures across the board and to see that you have the right security and other mechanisms in place to safeguard your operations. They also want you to be thoughtful about your technology planning process and to really take a long-term approach to it, and recognizing that IT deficiencies that aren't addressed can impact or potentially prevent, as identified in that survey, allocations from investors. So it is important to consider your approach to technology in a holistic perspective and how you're presenting your firm throughout the due diligence and fundraising process. And with that, I will turn it back to Kaylee.
Thanks, Mary Beth. That was a great discussion around how we're seeing the investor due diligence process evolve, particularly around technology. So at this point, I want to open the discussion up to questions from the audience. If you have a question for either Mary Beth or Kyle, please feel free to submit it in the questions box of your GoToWebinar interface now, and we can pose those to our expert speakers. Kyle, it looks like we did have a question come through during the course of your presentation. The question is from Justin, and he wants to know, are there any negative consequences of pitching a hedge fund through online video? If any, what are they?
I can't foresee there being any negative consequences about pitching through video because video is just one tool. I'm a big fan of the multi-channel approach to capital and the fact that you have to have a lot of arrows in your quiver. If you have video as a tool and you have to divert to another tool in a more appropriate situation, that's just what you do. That's just marketing. So I think video is just there to fill a gap when and if it can create value. And I just don't see a downside because, A, the world's moving in that direction. I think every manager will have video on their website within 5 years. That will happen. And just video is a way that you can capture, again, it's all the good things about a manager in terms of their confidence and their charisma and their conviction and their passion. You could put that in a video. You can't put that in a deck, is how I would answer that.
Thanks, Kyle. One other question for you from Melinda. How would the SEC view this video in terms of breach of the Act's policies? And apologies, it came in during the course of your presentation, so I'm not sure which video she was referring to.
We are deeply involved in that world for all the obvious reasons. The top turn video is probably the best example. With the good comes the bad. That video got so much coverage that within 3 months they were audited by the SEC. The SEC had no concerns whatsoever with the video. And the great thing about video and capturing the charisma and the qualitative components of a manager, you don't say anything typically that will challenge the SEC in terms of their regulatory requirements. Like you have to be smart. You have to be smart with your decks. Like you can't just go out there and say we can guarantee you 78% per annum. So you have to build these videos with all of the kind of sort of regulations in mind. So it's not unlike anything else. You just have to be smart, and you can't say things that you're not allowed to say in a public environment.
That makes perfect sense. Thanks. One final question, and I'm curious, and I'm sure a lot of our attendees are curious as well, as to some of the typical costs associated with creating these videos and other types of marketing materials.
There's 100 different forms of video. If you go to our, we have a website that shows creative stuff. It's just meylercreative.com. You can see a whole bunch of different varieties of video. It really relates to what you want to do. Common costs are from $5,000. The KFL video that was more like a $10,000 video with that level of animation. The top turn was unique in itself because the surfer was not free. So it's not hugely costly. It is an investment, but I think those investments are worth making because it changes the world's perception of kind of who you are, and it allows an individual to be in 1,000 rooms at one point. So.
Great, and we've got one more that just came in. What is the hit rate for your video marketing approach? How many people are viewing it from your email campaign, 1 to 5% or higher than that?
KFL is a beautiful example. The open rate of the email is about 30%. Industry standards around 15%. Our video view was about 7%. So, marketing-wise, those numbers are incredible. So, does everything achieve numbers like that? No, it just really relates to the connectivity you have to the audience you're sending it to. But I like to say that marketing is as much about statistics and probability as it is performance and relationships. So it's just combining everything that you would do in terms of a relationship-based marketing model. All I'm saying is it's so easy to know who the 300, 400, 1,000 people are out there who are interested in what you do. Why not plant the corn? Why not nurture those relationships and build a funnel of interest that you can begin to process over time, as well as the relationships. So, like the statistics on marketing using these tools in this industry are far and above better than what Nike would achieve, what Audi would achieve, what Rolex would achieve. That's because it's so new and it's novel. That's because it's working. And that's another thing to think. Like, everyone sort of says, well, like, it's non-traditional, but it's the very nature that it's non-traditional that it's working so well. And it's just going to become more ineffective as everyone starts doing it. And it is only a matter of time before people start doing what we're doing. So.
Great. Well, thanks for answering those questions. We are just about at the top of the hour, so we're going to wrap up today's presentation. For our attendees, if any of your questions or concerns were not addressed specifically today, I welcome you to contact either one of our speakers. We've included Kyle and Mary Beth's contact information for you here. I'd also like to take a moment to remind you that the recording, presentation slides, and complimentary documents from today's event will all be made available to you tomorrow. So you should receive an email with instructions on how to access those. Additionally, a short survey should pop up on your screen following the webinar. We'd appreciate it if you'd take a quick moment to send us your feedback. Finally, you may navigate to ECI.com, where we have a wealth of resources on due diligence and hedge fund technology. And with that, thank you to Kyle and Mary Beth for being our speakers today. Thank you to everyone for joining, and we look forward to seeing you at future events. Have a great day.
Thank you.